Hi, I'm Sabrina Vienneau with Mountain America's financial education team. A few years ago, my husband and I wanted to reprioritize our lifestyle. We wanted more time with family, and we wanted to prioritize some personal aspirations and goals. So to do that, we took a leap of faith and we each took part-time jobs. He took a role as the head bobsled and skeleton coach up at the Utah Olympic Park, and I got this great job at Mountain America as a financial educator. But what this meant was we suddenly were living on variable income. His job was very seasonal, and my role at Mountain America at times requires 15 hours a week and then sometimes 25 hours a week. So we had to learn to live on a fluctuating income. When we initially started out, we did a couple things right and a couple things wrong. What we did right was before taking the leap, we built up a nice savings. In addition, we also were living without a lot of debt. Beyond our mortgage, we didn't have any debt. We had no student loans, car payments, things like that. So we felt very comfortable taking this leap. But that level of comfort led to our mistakes. Crucially, we did not budget hard enough because, we had this nice savings as a cushion. We never really were big spenders, so we didn't have a lot of debt. So we felt really good. And we sort of budgeted, but we didn't budget hard enough. And after a few months, we found ourselves spending more than we were earning. And as a financial educator, I knew we were in trouble. So that led to part two, what I like to call reassessing and making big changes. And that involved two things. For us, we needed, number one, more income. So my husband took on some private skeleton clients that were international athletes to boost up his income. He's also a public artist and was able to land one nice project last year. I'm a freelance writer and I had a few articles published in magazines. And then I looked at things I owned and some belongings, and I was able to sell things to the tune of over $1,000. So that helped. But the biggest thing we did was we changed how we were budgeting. First of all, we weren't budgeting well, so we paid more attention to it. But second of all, on a fluctuating income, you have to budget a little bit differently. And so since you don't know what your income's going to be, you need to be conservative. So we looked at our income and we took the 3 least profitable months and came up with an average between those 3 months. And that's our income. Then we had to look at our expenditures. When you're, again, working with a variable income, it's important to categorize your expenditures. So we listed them all and we had 3 categories. Number 1 was things that had to be paid, our mortgage. We have to eat, groceries, things like that. Number 2 was money that should be set aside for things that we really value, or our goals, our dreams, things like that. And number 3 are our nice to haves. We were covering number 1. Everything that we had to pay was getting paid, but we weren't putting any money aside to re-beef up our savings and put money towards things that we really value, such as travel. And the nice to haves obviously weren't happening. So we realized we needed to, in addition to gain more income, we needed to budget a little harder. Most people do this by cutting expenses, and it's easy to cut the nice to haves, but we'd already done that. So we got creative and we really looked hard at category number 1, things that we had to pay. And we looked at our house, our mortgage, and realized, we probably have a lot of equity and we don't need to pay this PMI any longer. So we worked with our lender and we had the house reappraised and we went through the process, and sure enough, they were able to take the PMI off of our mortgage, which really helped. I also have a whole life insurance policy that I pay on every month, but I've been paying it for years and years and years, and I had quite a bit of value built up, and I was able to use the dividends from this policy to actually pay the monthly premium for the policy. And I've been doing that for nearly a year now. And so between those 2 things, we were able to save about $500 a month. We also looked closely at our vehicles. Both were paid off, but they were very, very old. One was 21 years old, one was 18 years old. And we dug deep into our budget, and this is what I mean by budgeting hard. We dug deep into the budget and realized we were spending over $700 a month on cars that were paid off. So we did some calculations, and it made more financial sense to sell one of the old cars and go get a new, more reliable vehicle, not new, used, more reliable vehicle with a small car payment than it was to have 2 paid off cars that were requiring a ton of maintenance. So all told, just with those 3 creative things, we ended up saving almost $1,000 a month. It's been a big boon for us, and it's allowed us to put money aside for things that we value, which we weren't doing before. So I'll sum up by saying, if you're working with a variable income, you need to get creative and budget harder. So be more strict about your budget based off your lowest income range. And again, get creative, maybe find some new income sources. Once you have that budget set, you need to do two other things. You need to reevaluate. For us, reevaluation happens roughly every 3 to 4 months because our income is varying so much with all the side projects we have going on. And finally, automate. So you have your income coming in, consider getting a secondary checking to cover all your bills, the number one category, and secondary savings so that you make sure you're automatically saving for things that you're dreaming of and things you really and truly value.